Pepkor's flagged an impairment of nearly 3 billion rand for its 2024 financial year. The fashion retailing conglomerate has cited trading uncertainty in the retail market and has added that a challenging footwear market is impacting performances in Techie Town and Shoe City. But Pepkor's not letting that deter it from rewarding shareholders. The group's highlighted a strong operating performance, cash generation, along with a healthy financial position. And it says in light of that, the impairment will not negatively impact any potential dividends for the period. Resilient, that's how MTN Rwanda has described its top-line performance for the third quarter. Service revenue rose by 1.6% during the period, while the firm's mobile subscribers grew just over 5%. Its bottom line, however, took a knock. Earnings before interest, taxes, depreciation and amortization came in nearly 23% weaker. MTN Rwanda says the zero mobile termination rate policy introduced in August last year has pushed up interconnect costs. It's also cited the local currency's depreciation. Nampak's lightened its portfolio. Africa's largest packaging company is selling Nampak INCS. That's its unit that handles industrial inkjet printing, laser marking and case coding solutions. The business is being sold for just over 142 million rand. Nampak says the move is in line with the asset disposal plan announced in August last year. Novus has flagged higher half-year profit. The printing and manufacturing group says its headline earnings per share could more than double. The firm says it benefited from orders received this reporting period, which were historically processed in the second half of the year. Novus has also cited profits from derivative instruments. The firm said to open its books later this month. South Africa's water and logistics woes are undermining the mining sector's growth and the industry's contribution to the economy. That's according to African Rainbow Minerals Executive Chair Patrice Motsepe. In his letter to shareholders published in the group's annual report, he stated that there was a lot still going for the industry, but authorities need to attend to bottlenecks hurting the sector. And Donald Trump is returning to the White House after being elected U.S. president. The news propelled the dollar and punished the euro. Here's more detail on that.
This will truly be the golden age of America. That's what we have to have.
Trump 2.0 winners and losers whipped up global markets. In Europe, the pan-European stock 600 index jumped over 1.5%, on track for its biggest single-day leap this year. Leading the march were the so-called Trump trades, or the stocks which could benefit from Trump's White House. He's seen as bullish for European defence stocks due to his warnings to scale back US military support in the region. Trump also wants to force NATO members to spend 2% or more of their GDP on defence. An index of Europe's aerospace and defence companies jumped 2.7% to a record high. Bitcoin surged to a fresh record, banking on a softer line on cryptocurrency regulation. But shares in European renewable energy companies were under pressure. Trump has said he'll scrap offshore wind projects through an executive order on his first day in office. In Asian markets, there was also a mixed bag reaction. The Shanghai Composite Index closed down nearly 1%. Trump has pledged previously to impose tariffs of 60% or more on Chinese imports and 10 to 20% on all other foreign goods. Japan's Nikkei closed up 2.61%, bolstered by chip and defence stocks. Meanwhile, in South Korea, the benchmark Kospi closed down over 0.5%. With many of the world's trade-dependent economies based in Asia, a Trump win could lead to major uncertainty in the region. Later this week, investors will turn their attention to the US Federal Reserve and the Bank of England's rate decisions. Trump's policies on immigration, tax and tariffs are generally viewed as inflationary, which could prompt higher US interest rates.
In company news, further afield, Toyota posted its first quarterly profit drop in 2 years. As slowing sales and production volumes stalled the Japanese automaker's recent record run, Meanwhile, local rival Honda Motor reported a surprise 15% drop in its second quarter operating profit, missing analyst expectations as it suffered a heavy sales decline in China. Here's more insight on those numbers in this package report.
Japanese automakers Toyota and Honda both reported slipping quarterly profits. Both companies cited falling sales and competition from China. Toyota's profits from July to September this year were 20% lower than the same time last year, at just over $7.5 billion. That was roughly what analysts expected, but marked the firm's first quarterly drop in 2 years. The result comes after stalled US production for 2 SUV models due to an airbag issue. Its income in China also fell in the first half of the financial year, hit by marketing costs competing against Chinese brands. Honda, meanwhile, missed analysts' expectations with its July to September quarter. It reported a 15% drop in profits to just under $1.7 billion, its first year-on-year profit decline in 7 quarters. Among its global vehicle sales, it logged a hefty 29% drop in China, which was its biggest sales and production market from 2020 until 2022. Consumers in China have rapidly shifted to lower-priced Chinese-branded electric vehicles and hybrids. Honda fared better in the US, though, reporting a 9% rise in vehicle sales over the first 9 months of 2024.